Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today's Tuesday. It's December 13th. It's about 8:25 in the morning. We're going to have a huge market-moving report in about 5 minutes. I may actually be on here while we're still having this report. Now, the report I'm talking about is the CPI, which is going to have a big impact on what the Fed does tomorrow. We're beginning the FOMC today, and the Fed makes an announcement on interest rates, and it's going to be between 0.50 and 0.75. Right now, we're gearing towards, it's hard to speak this early in the morning sometimes, but right now, we're gearing towards a year-over-year number of 7.3. Now, if the consensus is above 7.3, it's not so good. And I'm only looking at year over year. Nobody cares about month over month. It's noise. And ex-food and energy, which is really important, the target is 6.1. So anything above 6.1 or anything about 7.3 puts us in a pickle. Now, the PPI that came out last Friday, all the numbers were above the consensus estimate by one decimal to the right side. So it was like 0.6, 0.7, 7.7, 0.6, 6.4. They were all on the negative side. It'll be very interesting to see how the CPI does in comparison. And then tomorrow we'll have a speech from the Fed. Two things you need to pay attention to. First of all, we'll have the report in about 5 or 6 minutes. It usually comes a few minutes late. But one of the things we need to pay attention to is the bond market and how the bond will react. Notice the bond market is still at a swing high right here, and it's grossly overbought. And right now, even if we have 0.50, I think it's priced in and the bond market is set to go lower. That's number one. Number two, volatility. Volatility, even though the market went up 500 points yesterday, volatility went up almost 3%. And typically, when you have volatility, that means there's nothing good happening or foreseen for the market. Now, volatility right now is at the highest level we've seen since beginning of November. Actually, it's a 1 month high or thereabouts, about a 1 month high in volatility. Yeah, there we are. So be very careful. Now I'm expecting this volatility to creep higher. Also, don't let the noise of today's report get you, and I'll tell you why. Let me show you something. Look at the Dow Jones right now. If you look at the Dow Jones, and yes, it is 200 points higher, but if you look at the Dow, we're just now entering back into this channel. If we don't enter this channel and come back down, it won't really mean much because we got to go back above this channel here. Also, remember, the high here is about 34,700. We're now at 34,200, and we went as low as 33,500. So there's a lot of volatility. And we really won't know what happens till the Fed gives us forward-looking statements. And they've been really bearish. They haven't really been all that bullish. So don't let today's report second guess your market sentiment. Also, I want to show you guys this. This is really important, something you need to pay attention to. If you look at the broad market, we're still trading below the 200-day moving average. I know we're tethering with the 200-day moving average, and this market is doing everything possible to sucker you into believing we're going to go above, but I don't think that's the case, and I'm going to show you why. First of all, the number on the S&P, this was at 90 percentile. It's at 80 right now. We've got a lot more vulnerability here than we had for weeks. Now, the Dow Jones, we have now 88%, we had 95%, and only 62% of stocks are trading above the 200-day moving average. NASDAQ 153%. But the worst part, here's where they say the devil's in the details. All stocks trading above $2, only 43% of stocks are trading above the 200-day moving average. Folks, that's a real vulnerable market, and only 60% are trading above the 50-day moving average. And when you look at this, I want you guys to see this so you can see what I'm looking at. You will see here that it's already headed lower. And after it comes up to these levels, you can see it doesn't go much higher than this. This is any stock above $2. It's already headed lower. So don't let the volatility shake you up and distort you. Now let's talk a little bit about what to expect. A few things. We had earnings on Oracle yesterday, and Norwegian Cruise Lines, which we're short right now in one of our services, got downgraded. So you may see a little upside from Oracle and Cisco and communication-related stocks. But again, let's see how it does. And again, Oracle, it wasn't anything crazy. It was better than expected. Those were the two major stocks that we had something to talk about. Now, talking about the broader economy, Market participants are optimistic that the crucial U.S. inflation data that's coming out in about a minute may hope would persuade the Federal Reserve and other central banks to step back from aggressive interest rate increases. We'll see. I think they're going to continue doing exactly what they're doing. Energy stocks led the gainers as oil prices gained amid continued concerns about tightening supply as the Keystone pipeline between U.S. and Canada remains closed. That's not good. We got winter coming up. I mean, we're already in winter. I'm in Florida, so it's never winter here. Now, here's the big report. Today, all eyes are on the U.S. consumer inflation data. It's coming out right now. Economists are expecting the CPI, I'm not even going to talk about month over month, year over year, 7.3%, compared to previous value of 7.7%. So if we're above 7.3%, it's not good. But if we're below 7.7, it's better. Now, here's the good stuff. This is what I was talking about. Core CPI. This is the number. Last time they had 6.3, they're expecting 6.1. If we don't get a core 6.1, it's a problem. Now, here's the odds, and this is what I kept telling you. These are the odds of seeing rate hikes, 72% of 50 and 27% of 75. I actually thought this number would go to 30%, 25 to 30%. So it's at 27%, but you still have a 72% of a 50 basis point hike, which I'm pretty sure will happen tomorrow. The Eurex futures are up just slightly, with investors digesting a series of regional economic data ahead of the release of U.S. inflation, which is coming out about now. Let's see if it's out. I'm just going to keep rolling this as we talk about it, and I'll see when it stops. I'll see what the data is. So November ahead of the U.S. inflation data, U.S. claimant court increased by 30,000. November weaker than expectation of 30,500. Unemployment rate stood at 3.7% compared to 3.6%. Nothing really crazy there. China today closed slightly lower as uncertainty over rising COVID cases in the country following a dismantling of crucial parts of the government's zero COVID policy weighed on the outlook for the world's second biggest economy. We'll see how that goes. And Japan closed higher, fueled by gains in shipbuilders, gas, and financial services. So let's see. It's still rolling, Let's see if the market is starting to price anything in. Let's take a look at the futures. I love doing this in real time, and that's why I wanted to do today's report a little bit later than usual. I wanted to do this in real time and see how the market is reacting. So far, I'm not really seeing any reaction, but it'll be very interesting to see what the number came in at. Let's see. Maybe it's over already. It's still flipping, still moving around. The range is still not there. All right, let's continue. So let's move into sector rotation. As soon as it's done, I'll go ahead and look at it. But right now, things are kind of holding steady. And the bond market bond market's moving higher. Okay, it must not be such a bad report because the bond market seems to be moving higher. Again, I don't know what the number is, but we'll find out. Now, remember, today is, what is today? Today is Tuesday. Yeah, it is Tuesday, right? And Tuesday, we talk about strongest sector, strongest stock. So looking at our sector analysis, here are the 11 major sectors, and you will see nothing really changed here. Industrial, healthcare, consumer staples. Notice consumer staples went all the way from being down here to being up here again. And I think energy is going to meet the exact same fate. So I am actually increasingly bullish on energy, and one of the reasons why I'm bullish on energy is when we look at our momentum levels, right here, you will notice that energy, you have 17% of stocks trading above the 50-day moving average and 70% trading above the 200-day moving average, which means in the short term, it's really overdone to the downside. But as you could see right here, maybe a little bit more and that's it. But to the upside, you've got a lot of potential and you still have a lot of foundational strength with 70% trading above the 200-day moving average. That's telling me that that's a very, very strong sector. Let's see, nothing yet here. Let's continue. Let's continue moving along. Let's see if the market is moving a little bit. About the same, 217, 214. Nasdaq's going up, Dow's going down. Let's see how it does in a few minutes. But anyway, so going back in here, you want to focus right now on industrial, healthcare, consumer staples. Those are the three strongest sectors. But don't throw out energy. Don't throw out the baby with the bathwater, okay? And on the weakest sector, communication services or consumer discretionary. Now let's look at the stocks in those sectors. if we look at the strongest stocks, energy and healthcare are still holding. So my suggestion is let's hold off on energy till we get a little more certainty, and let's stick with the healthcare. So you've got Lamb Weston, you've got Vertex Pharmaceuticals, you've got Lilly, you've got Cardinal Health, my favorite one right here, the strongest stock that I've been saying is the strongest stock now for weeks, Cardinal Health. And I would do that. I would go that. Now, if you want to bottom pick, Occidental is excellent. Where is Schlumberger's excellent, and ConocoPhillips is excellent. If you want to bottom pick right now, let's see. We can't seem to get this data, huh? They seem to be. Let's see what it is. Markets are just kind of holding steady, not really doing anything. I'm hoping the report is better than expected. Let's see if we can get a little preview here. No, nothing here yet. Let's see, news, top stories. Let's see. No, nothing yet here. So that's the top stock. The bottom stock, Generac Holding. Oh boy, Dish. There it is, folks. Here's how you play this: Align Technology, Dish Network, PayPal. How long have I been saying that these are the worst stocks, and nothing has changed? And also, by the way, Expedia right now, summer travel with the economy where it is, not seeing a major pickup. So again, that's where we're at right now. The strongest sector is healthcare, and I'm nibbling on energy. Weakest sector is consumer discretionary, and we want to nibble on network and consumer stocks. That's consumer discretionary right here, Expedia. And Align is consumer discretionary. It's medical consumer discretionary, mostly consumer discretionary at this point. It's not something you need. It's a luxury. And then Dish and PayPal. You don't want to be in those stocks right now. Still don't have the data, but I will update you when I send this video out. I'll update you on the report in the Telegram channel. Now, folks, a major sell the news event could be just hours away. And if you haven't taken steps to protect your portfolio, oh boy, you could be in trouble. That's why I'm hosting a brand new special training today at 1 p.m. Eastern Time. My goal is to show you how to prepare for tomorrow's Fed announcement. We usually get extreme volatility surrounding the announcement. So I'll be showing you a strategy that's been shown to work regardless if the market goes up or down. So if you're wondering if now is the time to get in before the Fed makes their move, or if you think it might be a good time to sell out and go to cash, don't miss today's event at 1 p.m. Eastern Time. It's going to be just me. It's not going to be the champion indicator. This is totally different. I'll show you how you could capitalize on this event with my number one hedge play, regardless if the market goes up or down, regardless of what this data comes out to, regardless of what the market throws your way. I'll show you how you can capitalize on this event with my number one hedge play, regardless of where we go. Use the link below to join the room before 1 p.m., and I'll give you my number one sector play for free. I'll give you some ticker symbols, and I'll give you a good analysis of the market. 1 p.m. Eastern Time, I'm doing this. It's imminent, urgent because of today's announcement. We got to have this meeting. I'll see you soon, 1 p.m. Eastern Time. Follow the link below. And by the way, post comments in the YouTube Wealth Press channel. I respond to them. I want to see what you guys got to say for yourself. And send me an email, support@marketgeeks.com. Have a great day, and hopefully this number is not as bad as a lot of people anticipate. Bye, guys. Take care, and I'll update you on this shortly.